right, everybody. Welcome to our webinar. My name is Jerry D'Ambrosio. I hope everybody's doing well. Let me just do a quick sound check first, just to make sure everybody can hear me loud and clear okay. If you guys don't mind, those of you using GoToMeeting, just type in the chat box, say, hey, Jerry, I can hear you. Sound is coming in okay. David says yes, all good. Brian says loud and clear. Malcolm says good. Well, fantastic. Awesome, guys. Well, again, my name is Jerry D'Ambrosio. I'm the Manager of Educational Content with VectorVest. Today's webinar is titled Mastering Moving Averages. And in particular, I'm going to show you guys a technique using 3 exponential moving averages. It's called the EMA squeeze trading technique. Some of you, if you are a VectorVest subscriber, you may have seen this presentation or technique in the past. I actually did a special presentation on this technique back in November of last year. So this might be familiar to some of you. If you haven't seen this yet, I want to welcome you. This is going to be a nice, nice presentation for you. Hopefully you guys learn a little bit about, just how to use moving averages, in your swing trading portfolio. Hopefully you guys are allocating a portion of your portfolio to swing trading. Maybe you have money set aside to do that, right? You have your retirement portfolio, maybe you have your options portfolio, and you have money set aside, maybe to trade a little bit more actively using technical indicators, and moving averages are technical indicators. We also, with us here today, we have Stan Heller. Stan is our VectorVest Canada consultant. He will be the one in the background answering questions, typing out answers to your questions. As we go, I do have a lot of content to cover here, but as we go, if I feel like a question is coming in and it's, it's relevant to the topic at hand, I will answer it along the way, and I will try to save some time at the very end to answer some of the more common questions. I do want to welcome you folks that are joining us via YouTube as well. Okay. I'm getting alerts on my phone from investing.com. Sorry, I'm just having to close those windows. If you have any questions, again, if you are joining us via GoToMeeting, use that question box there that you see. And if you can't see this window that I have open here, just click on the little orange arrow there, and that will expand the view, and you'll be able to type in some questions along the way. And again, Stan will be here to answer them. Okay, so and again, if you lose sound or video, just log out and back in. Sometimes that happens just depending on your internet connection. Sometimes it's a little intermittent, so just log back out and log back in. And yes, Daniel, this is being recorded. Okay, so what we're going to cover today are a few things. Well, number one, why are moving averages so important? Moving averages provide a simple means of smoothing price action, making the trend and the momentum more discernible. I love MACD. I love stochastics. I actually use stochastics quite a bit when trading candlestick reversal patterns. Okay. Those those indicators, along with Bollinger Bands, their foundation, their basis is actually moving averages. So they can be used as standalone indicators, moving averages, to help identify trend, strengthening trend, weakening trend, emerging trend. But they are also the foundation for a lot of different technical indicators. Maybe you weren't aware that stochastics is based on moving averages, or Bollinger Bands, or MACD. Well, MACD actually has the words moving average in the name, so you probably are aware that MACD does use moving averages. But they're a very straightforward, simple tool to help us, identify, again, changes in trend, strengthening and weakening trends as well. Some key concepts that we'll talk about: moving averages remove the noise and define the trend to help us predict if the stock will continue to move up or down. Okay, so a few of the things that we'll cover in today's webinar: 5 key ways to use moving averages, and the EMA squeeze swing trading strategy. This is a fantastic, easy to use, swing trading technique using multiple moving averages. And we're gonna provide you guys with a complete system to help pinpoint high probability buy and sell signals. And we're also going to talk later on about a new course. It's the second time we've delivered this course, Stan and I, on moving averages. It's a complete moving average course. We'll talk a little bit more about that a little bit later. So again, some key concepts here. The two most popular moving average types are simple moving averages and exponential moving averages. Simple moving averages just simply divides the closing prices for each day in the look back period and provides you with a moving average. Each day in the look back period holds the same amount of weight as any other day. Okay, just simply dividing the closing prices for each day in the look back. EMAs are what swing traders like to use a little bit more than simple moving averages because they give more weight to recent prices. Okay, here on this chart here we have two 13-day EMAs. The EMA in red is a simple moving average. The EMA in green is an exponential moving average. And you can see just simply as the trend emerges and price rises, you can see that 13-day EMA hugs price a little bit more closely. Look, moving averages, guys, are lagging indicators, period. Okay? They're not leading indicators. Moving average crossovers, using moving averages, you really need a meaningful change in trend. They're not reversal signals necessarily. That's why I like using candlestick patterns so much, is because they provide you with reversal signals, reversal patterns. Moving averages, they're trend indicators. You have to understand the difference between a reversal and a trend, right? So you do need a meaningful change in trend. Let me just do something here quick so you guys can see my cursor at all times. You need a meaningful change in trend. So as this trend emerged, price began to rise. You could see the EMA hugs price a little bit more closely. Okay, and just using a simple crossover got us in a little bit earlier here with price crossing above the EMA before it crossed above the simple moving average. Okay, so when you're swing trading, we really like to use EMAs as opposed to just simple moving averages. So 5 key ways to use moving averages. Number one, they define and invest with the trend, whether it be up or down. So they help determine how strong the trend is. And in particular, we look at the slope of a single moving average or the slope of multiple moving averages. And really specifically, if you're using multiple moving averages, the separation that is created with the two moving averages. This will become a little bit more clear once we get into the technique that I'm about to show you. But here, one way, just really simple, they help us define and invest with the trend. They identify buy and sell signals. You know when the safest time to buy and when to consider selling. Moving average crossovers, price crossing above or below a particular moving average gives us those signals, those buy and sell signals. Determine broad market conditions. Is there more buying pressure or selling pressure? Is the market healthy? Is it in an uptrend or in a downtrend? How strong is that trend? Is the trend strengthening? Is the trend weakening? It's rather difficult sometimes to look at just price alone, and determine strengthening trend. We can draw a trend line on price, sure, and you can look at price and see higher highs and higher lows. It's a little misleading sometimes, right? Because with the naked eye, it's really hard to determine, is price, even though it's rising, right? Is that trend strengthening or weakening? And that's what moving averages help us do here as well. They also provide support and resistance as well. So if your stock is finding support in an uptrend on a particular moving average, or is it in a downtrend? Is it hitting resistance on a moving average, a 20-day EMA, for example? A lot of swing traders like to use 20-day EMAs. We're not going to use that moving average here today. I'm not going to show you a 20-day EMA, but just as an example, You know, price in a nice short-term uptrend, it's above the 20-day moving average, but historically what you're noticing is pullbacks to that 20-day moving average and price settling in right at it, right at that 20-day moving average, and then retracing from it time and time again. So is the stock finding support at a moving average? Is price extended? So this is the tough part, right? You see price screaming higher, just absolutely almost parabolic, right? But just really, really in a strong trend. However, price is pulling further and further away from, you know, those moving averages. You know, moving averages are averages, right? So the further away something gets from its average, the more likely it is, and we're talking about anything, we're talking about stock prices here, but just in terms of anything, the further away stock price moves away from that moving average, right, the more likely it is to come back towards it, to revert back to it. Reversion, mean reversion, right? Revert back to the mean. So you have to identify these things. These are great ways to use moving averages. Okay, pull up something. Oops. So here is an example here, ASML. Okay, we have a number of different moving averages on the chart. The institutional long-term trend, that's a 200-day moving average. The long-term trend is the blue line is a 100-day moving average. The intermediate trend is a 50-day moving average, and you have, I believe, a 13 and a 20-day EMA at the top in green and red. So you can be in a short-term downtrend, but in an underlying or underlying intermediate trend. For example, you know, with ASML, we don't have price on the chart, but if price fell below, let's say a 13-day EMA, right? That tells us that the short-term trend is down, right? If price is below a shorter term moving average like that, an 8, a 13, or a 20, for example, you're in a short-term downtrend. You know, not all is lost, because price can still be above an intermediate term trend moving average like a 50. So intermediate uptrend, but a short-term correction. You know, good way to buy the dips in that long-term trend or intermediate term trend. When price is still above it, you have these moving averages, particularly the intermediate trend and the long-term trend sloping upward like that. You know, you're in a nice, strong underlying trend, but look, stock prices are going to pull back, and this is a really nice way to buy the dip. So here's what a predominant downtrend looks like. Here's Costco, right? So we're looking at those same types of moving averages. Currently, let's look at the hard right edge. What are we looking at? Well, we'll call that orange, I guess. The orange line is the 200-day moving average. So price has just crossed above that 200-day moving average. Okay. The shorter term moving averages, okay, price has crossed above those as well. Now we're still under the 50-day, we're still under the 150-day. Price is going to have to rise a little bit more, you know, to confirm those trends. But this is what a predominant downtrend looks like: lower highs and lower lows. Now, as of the current hard right edge, is the trend strengthening or weakening? It's weakening. The downtrend is weakening. The shorter term moving averages, what are they doing? They're curling under and starting to pick up a little bit of momentum here. Now again, the intermediate term, the longer term moving averages, they're still sloping downward. Okay, so just a different perspective. Shorter term perspective, you got a nice rise there. You're almost, actually, if I drew a trend line here, kind of connecting these highs, it looks like as of the hard right edge, we just broke that downtrend. Okay, but what we're looking at here is a change in the short-term trend. Now, it remains to be seen what's going to happen here with the intermediate or the longer-term trends. But you know, a nice sign here in this case that price is rising. Shorter-term moving averages are also curling up there as well. So, before we get into the EMA squeeze trading technique, I just want to talk real quick about a new course that Stan and I are launching. Now, it says it begins April 3rd, which is today, which begins Saturday. Once you register for the course, we'll talk all about that later. Don't worry about that. Once you register for the course, you will have access to all of the modules. The modules are all pre-recorded. Stan and I will also be conducting 6 live mastery support sessions, and those sessions actually begin on April 21st. So when you register for the course, you have almost 3 weeks to absorb and watch all the core modules. It's kind of like Netflix, right? I love Netflix. I'm a big binge watcher. When I get into something, I don't stop till it's done. And that's very similar to what kind of the access that you have here with all the core modules. You can watch them all before our first live session on April 21st. Okay? This is Bob. Bob actually sent Stan an email after the last Mastering Moving Average course that we did, he and I did back in November. He said, Stan, you're a very, very good teacher. I like your style, but most of all, I appreciate the simplicity of your explanations of the strategy. I am more impressed every day by your instruction and content of this series and strategies and systems. Each is very good. In certain circumstances, I can see myself using most of them depending on the portfolio I am working with. Okay? The Mastering Moving Average course, it kind of covers everybody. There are shorter term swing trading techniques. There are also longer term position trading systems as well. Okay? What I'm going to share with you now are the moving average combinations that I think are just really ideal for defining shorter term swing trading. Not too fast, not too slow, kind of the sweet spot in terms of short term moving averages, and it's a system called the EMA squeeze. Okay? So here's what we look at. Okay? After a pullback, or what's called a quiet period, where the 3 moving averages, the 5-day EMA, the 8-day EMA, and the 13-day EMA, they're squeezing together. After that period, after that squeeze, where price has been falling, what happens is once price begins to stop falling and start rising again, those moving averages begin to pull apart or fan out, and they begin to trend upward. Using the slope of the 3 moving averages after a squeeze, we can predict if a significant trend change is underway, and I want to really emphasize that, significant trend change, okay, and whether it is likely to continue. A strong upward move increases the probability of a successful trade. And what I'm going to emphasize once we start looking at charts is that fanning action of the 3 moving averages and how important that is in our trade selection. Okay? So here are the buy rules. I always like to start off with written down rules. You know, some of you guys you learn better by kind of reading words or numbers or explanations on a screen or a page. I'm also going to show chart examples here for those of you that maybe learn better that way. So our buy rules are, we look for the 5-day EMA to be greater than the 8-day EMA, and the 8-day EMA to be greater than the 13-day EMA. Okay? We also want price to be above the 50-day simple moving average. We don't have to use an EMA, guys, when looking at 50-day moving averages or 100-day moving averages or 200-day moving averages. Remember, you know, the EMAs are most useful for swing traders because they give more weight to recent price action. When you get higher than, let's say, a 40-day moving average or a 50-day moving average, simple moving averages are fine. Okay, so we look for price to be above the 50-day simple moving average. That tells us that we are in an intermediate term uptrend. Okay. We also want the relative timing indicator. Relative timing is a proprietary VectorVest indicator that measures a stock's short-term price trend. We want that indicator to be trending higher, and specifically higher over a minimum of 3 days. Okay, higher today than it was 3 days ago. Very important here. We also want the market to be in an uptrend. okay? And we're going to use the DEW market timing signal in VectorVest to identify that trend. So the DEW has to be up. The DEW signal has to be in an up position in order for any of the other rules to even come into play. And our sell rule, here's our line in the sand. We are going to close when the 5-day EMA closes below both the 8 and the 13-day EMAs. Okay, it's a very systematic approach here, very systematic technique. Okay, so here's what it looks like. Again, buy rules, DEW is up. This pink line here is the 50-day moving average. The 5-day moving average is in green. The 8-day moving average is in, let's call that red. And the 13-day EMA is in blue. So during this period, and don't worry, look, I don't even know what stock this is. It doesn't matter, right? Stock XYZ. During this period, what do we see? We see price below the 50-day moving average, right? All three of the moving averages are also below the 50-day simple moving average. And then what happens? You get a reversal. Price begins to rise, and you see, guys, that squeeze, the squeeze of the three EMAs. What is this? What are the slope and the separation here between the three short-term EMAs during this downtrend? What is that telling us? Well, it tells us that not only that you're in a downtrend, but the separation that's being created tells us that that downtrend is strengthening. Well, the downtrend loses steam, the EMAs start to squeeze together, and then what happens? Price continues to rise, and you see the separation that's now being created by those three moving averages. The 5 is separating from the 8 is separating from the 13. We don't take the trade yet, just because we see the separation that's being created by the moving averages. Remember, we need price to be above the 50-day moving average first. It's great to see that separation happening before price crosses above the 50-day moving average, okay? But a prerequisite is we need price to be above the 50-day moving average. And you can also see during this time period, price, RT is also rising. It recently, this horizontal orange line here is 1. It recently crossed above 1. It's hitting higher highs. It's hitting higher lows here. RT is rising. Trend is strengthening. Moving averages are separating. Price closes above the 50-day moving average. There's your setup. There's your setup. So this green candle here that closed above the 50-day moving average, that's kind of the first day, right? That's the first day where you can even consider taking this trade. Price has to be above the 50-day moving average. What else do you need? Well, you need the fan, right? The fanning action, the separation between the three shorter-term moving averages. Do we have that? We do. So that is what I would consider the setup candle. That close above the 50-day moving average with the three shorter-term moving average beginning to separate, relative timing trending higher, that is your setup candle. The very next day is your entry, is your execution, because we got follow through the next day. We got confirmation. Price needs to go move higher than the close of your setup candle to enter. Okay? So there's our entry rules. There's our entry setup. Here's our sell rules. This is for the more prudent investor. Okay? You ride that trend higher. If you're fortunate enough to have, a really nice gain in the trade, what you're going to see are those moving averages continue to separate. The 5 is going to be above the 8. The 8 is going to be above the 13. You're going to continue to see nice separation. That's telling us that the trend is strengthening. Okay? One of the things that you can observe is a price RT divergence. That's going to give us an early warning signal. So if price is rising, but relative timing is falling. So if price, let's just call this right here the hard right edge. I know we have more data, but let's just, for all intents and purposes, call this the hard right edge. If you see price hitting a new high as of the hard right edge, but you see relative timing not hitting a new high, that's an early warning signal of a potential trend change. Okay? And also, another warning signal is the gap in the bands are really, really beginning to widen. Okay? 5-day EMA is extended from the 50-day EMA. You can see the separation there. Another warning is the 5 and the 8-day EMAs are squeezing. You could see that happening here. So, you know, if we had price on here, we would see price falling. You could see RT falling as well. So another warning signal is the 5-day EMA squeezing and then crossing below the 8-day EMA. The line in the sand, your last line in the sand, and your sell signal if you're a prudent investor is when that 5-day EMA crosses below both the 8 and the 13. That's your last line in the sand. A meaningful change in trend has occurred, okay? And that's when you should consider taking your profits off the table. Now, we say that sell rule there is for prudent investors. If you're a little bit more of an aggressive trader and you're real keen on trading candlestick reversal patterns or you know, aware of these kind of bearish divergences, there will be times that you can sell sooner, okay? But the last line in the sand is when that 5-day EMA closes below the 13-day EMA. Again, there probably are opportunities to sell sooner. You know, if you're just aware of reversal signals and bearish divergences, if you know, and it's going to take some time if you're not right now familiar with those kind of things. But this, I just want to keep things simple. This is a very simple exit, right? Very visual. 5-day EMA closing both below the 8 and the 13. Okay, so oops, let me go back. So here's what it looks like really on a more expanded picture. Okay. Here's your squeeze. The purple line or the pink line is the 50-day moving average. You can see price below the 50. The 3 moving averages are below the 50. And that squeeze occur. That squeeze of those 3 moving averages. Price rises. Okay. Moving averages cross above the 50. The 5, the 8, the 13 cross above the 50. Price crosses above the 50. And now you're starting to see that separation being created by those 3 moving averages. Relative timing is trending higher as well. Okay. Now this particular trade would have netted about a 49.5% gain, because here is where you exit, right? You could see how far the 5, the 8, and the 13 EMAs separated from the 50. You almost saw a little warning signal here as well. Look, from your entry, from the inception of the trade, there was no point where the 5 closed below both the 8 and the 13. But it did here in July of 2020. And you could see what, you can kind of get an idea. You can't really see because we don't have price on right now, but you can get an idea of what price was doing, because the moving averages were they trending? No, they were kind of moving sideways. You get whipsawed back and forth. There was no signal here, guys, for another re-entry. Okay? You might have said, well, what about here? The 3 moving averages, I mean, if you look here, they were separating, weren't they? Sure. But look at the relative timing indicator. That did not give us an indication. Number one, it wasn't rising, right? We see this bearish divergence during this entire period, July of 2020 to September of 2020. Prices moving sideways. You know, you may look at here and say, oh, was it another entry? You know, the squeeze happened here. Moving averages began to fan away from each other here above the 50-day moving average. But look at the relative timing indicator. Very important that you have that behind you. Okay. Here's a Canadian company, right? True Leaf, a cannabis company, one of the better ones. TRUL. Okay. Um, Here was your buy signal on July 13th of 2020. Now here, there's two different types of setups. There's a setup where price falls below the 50-day moving average. The three moving averages are below the 50-day moving average. You get that squeeze, and then you get the crossover from below the 50 to above the 50. That is an entry. There are other times where, look, price is already going to be above the 50-day moving average, right? You get price above the 50-day moving average. You get these pullbacks back towards the 50, kind of similar to what you had here. The three moving averages are squeezing here, but they're squeezing above the 50-day moving average. That's fine. You don't need price and the three moving averages to be below the 50 and then cross above the 50. So there's two different types of setups there. I've so far talked about when price is below the 50, the three moving averages are below the 50, and then you get that initial crossover. Here in this case, you have price above the 50, you have the three moving averages above the 50, but you still get the squeeze, and then you get the separation. You get price pulling away from the 50, you get the three EMAs, the 5, the 8, and the 13 begin to separate and start to rise. The buy signal there was on July 13th, right at about 20 bucks, $20.15. Now, what happens a lot of times, right? You buy a stock and what happens? It goes down. The next couple of days you're in it and you're thinking, oh my goodness, here we go again, right? I buy and then all of a sudden I buy and it falls. Okay? Maybe in the past what you would have done in this situation is you would have sold it, right? I wouldn't necessarily call it panic selling, but it's just an emotional reaction to price falling immediately after you buy a stock. Well, with this system, you wouldn't have sold it because the 5 never crossed below the 8 never crossed below the 15. Sure, they got squeezed in there, right? But the trend continued, price stayed above the 50, and then the separation once again began. Okay? Now look at what's happening. Look at those three shorter term moving averages. Price is really screaming up higher and higher, right? Above both the 5, the 8, and the 13. You get nice separation between those three, but they're really, and price is really starting to pull away from not only all three of those moving averages, but the 50-day moving average as well. Okay? Now here, it's hard to tell, but right here, this unfilled green candle followed by that filled red candle, that's called a bearish Harami candlestick reversal pattern. It's a very reliable reversal signal. The following day, you got confirmation of that signal. That would have been kind of your earliest exit out of this trade. Okay, the prudent sell signal is when the 5 closes below both the 8 and the 13, and you could see that happened on August 27th of last year. So you're in this trade about a month and 2 weeks. You get a nice 33% gain here. $6 on a $20 stock, I'll take that all day. And then what happens? Price continues to fall. All right, you're out of the trade. There are no more buy signals during this time period. Price, oh, I'm sorry. Also, too, you can see, I should have pointed this out. RT rising, right? RT is rising along with price. There's your entry. Very, very important. Okay. You can see here this relative timing trend, lower lows and lower highs. All of a sudden it reverses course, crosses above 1. Price falls below it during this time period, the 50-day moving average. Now you're getting that squeeze again. Price stops going down, starts to settle in. Quiet period during that squeeze, and then begins to rise, crosses above the 50-day moving average, and then the three moving averages are separating. Those bands begin to pull apart, and the stock begins to rise. Now, what we're looking at here is a nice 48% gain on that trade. Okay, the 5 never closed below the 8, both below both the 8 and the 13 there. Okay, here's Sleep Number. This is a stock in the U.S. market, SNBR. Here was our entry. This was back in September of 2020. RT trending higher. Now here also the squeeze occurred above the 50-day moving average. But now price begins to rise. The bands begin to pull apart and start to rise as well. The buy signal was on October 5th, right at about $48.15, which again, really important. You got a nice volume spike on that day as well, which helps. Okay. RT begins to rise. We enter. We ride that trend for a 52% gain. The 5, I know, look, you get this one big down day, and that might scare you. Okay. But we're trend trading here, right? Now that's a bearish engulfing pattern. That's a bearish engulfing pattern. An unfilled green candle followed by a filled red candle. That's a really strong bearish engulfing pattern. You never got follow through the next day. You never got confirmation of that bearish engulfing pattern the next day. So even though you say, you know what, that's a bearish engulfing, I'm prepared to exit the following day if price continues to move lower. That's what you should be preparing to do. But it never did. Price rose. The 3 moving averages, the 5 never crossed below both the 8 and the 13. So if you're saying, you know what, forget these bearish candlestick formations, I'm just going to simply use the moving averages as my exit. You never got that. You never got it during this quiet period here. You got the squeeze, but you never got the actual crossover and a nice 52% gain there. Okay, LPX, this stock, this is also this is as of the hard right edge as well. Stock's hitting a new high here. Not quite sure what it's doing today, but really good stock. Louisiana Pacific. It's a building, wood products company. Isn't lumber quite expensive nowadays, right? So the stock is doing quite well. All right. So here was our entry on January 21st of this year, right about $30.94. See, in this case, we didn't get, the price crossing above the 50. Price has to be above the 50. I never said that the only time that you can enter into the trade is when price crosses above the 50. It just has to reside above the 50. It has to be above the 50. And there you get the separation between those 3 moving averages. You get that squeeze here. Okay, relative timing trending higher. There's your entry. And you might look at here and say, didn't the 5 close below both the 8 and the 13? It didn't. It didn't here. And as of the hard right edge, you're still in the trade. Okay, you're still in the trade. 81% gain. You buy it at $30.94. It's about 56 or 57 bucks as of there. All right. Very noisy chart here, but I'm going to go through it. All right. We'll just start on the left-hand side. Here is your quiet period. The green and red arrows on the chart, guys, are DEW down and up signals. Okay. So you're in a DEW down situation. You're not even thinking about placing any trades using this system. But here's that quiet period. It doesn't look too quiet. It looks actually quite volatile. But the moving averages are telling us that price is settling down. The downtrend is weakening. New uptrend begins. Price crosses above the 50-day moving average, and you start to see that separation between those 3 moving averages. We also have a buy rating that confirms the potential sustained uptrend. Okay, when the distance between the 3 EMAs is the widest, then the trend is the strongest. Okay, it says a buy signal is triggered when the moving averages have squeezed together and changed direction after a quite quiet consolidation period. The fast EMA, which is the 5, is above the medium EMA, which is the 8, and then both are above the slow EMA, which is the 13. RT is hitting higher lows. Just recently in this area here, where was our buy signal, hit a new higher high as well. That resulted in a 33% gain, because here you had your sell signal. Okay, here you had your sell signal. Here was an area here where the 5 and the 8 kind of squeezed in tighter and tighter, but they never crossed below the 13. That's the blue line. Eventually they did. back in, looks like it was end of May 2020. Okay, you're out of the trade. You take your gain off the table. And look what's happening. Price is really pulled away from that 50-day moving average. What do you expect to happen? Right? Do you expect price to just continue to scream higher? No, you're going to expect a reversion back towards that moving average. We got that. Right? We got the pull back towards the 50. In this case, price stayed above the 50. Right? Settles in above that 50-day moving average. That 50-day moving average looks like it's serving as nice support here. You get that quiet period, the squeeze of the three moving averages. You're still in a DEW up situation too, right? You got to go all the way here to September of 2020 to get that DEW down signal. Nevertheless, we're in that DEW up signal. Price above the 50 starts to change direction. The separation between those three moving averages gives us our signal. Price is already above the 50. When price is already above the 50-day moving average, what we really need to see in order for us to take the trade are those three moving averages separating. After that quiet period, after that squeeze, you get the three moving averages begin to separate. There's your re-entry. Okay, there's your re-entry. This would have resulted in a nice almost a 27% gain. Look at how far, guys, price is pulling away from the 5, the 8, the 13, and the 50 as well. You got to expect a reversion. You got to respect the pullback. We got that pullback. Your sell signal was right here, and that was triggered when the fast moving average crossed below both the 8 and the 13. Okay. Another example here, WELL. This is a Canadian stock. A lot of you guys are saying, well, I don't trade Canadian stocks. Some of you might be saying, I don't trade US stocks. I think this is kind of really the beauty of this course. Stan and I, and the course that we're going to talk about here in a moment, we're going to go through both markets. You're going to see examples for both markets. And the system applies to both markets. So whether we're looking at a Canadian stock, which we're looking at here, WELL, it doesn't matter. The stock doesn't matter. It's the technique that's important for you to understand and get familiar with, because you're going to apply the technique to any market that you trade. So here was the squeeze of the, here was the squeeze of the quiet period. All right, look at that RT during that quiet period. All right, trending lower. RT reverses course, starts to trend higher. Price does as well. Price is already above the 50-day moving average. You can also see here volume starts to pick up, which is a nice bonus. It's not, look, we haven't talked much about volume, and volume isn't necessarily a component of the system, but it's nice to have spiking volume behind the trade. Okay, so price begins to rise. It starts to pull away from the 50. The three EMAs start to fan apart. There's your entry. Here's another squeeze or quiet period. However, we didn't get a sell signal. The 5 never closed below the 8 or the 13. Never did here either. So this was a nice trend that you could have continued to ride up as long as the 5 never closed below both the 8 and the 13. All right, so the setup. The hardest and most time-consuming part of swing trading is finding the right stocks with the correct setup early in the trend, right? 3 ways VectorVest makes it easier. The stock viewer allows you to rank, sort, and analyze the best candidates quickly and easily. You can look at a watch list, the watch list viewer as well. Look at some pre-built premium watch lists. You can create watch lists of your own. The great thing about the stock viewer and the watch list viewer, right? You open up any list of stocks and they're sorted by VST. VST combines the value, the safety, and the timing into one single indicator. I probably speak for Stan when I say that the Unisearch tool is probably my favorite and preferred method of finding stocks to trade. I don't mind looking at charts. I'm a big chart reader, but I like a way to get me to the chart faster. Okay, and the Unisearch tool will help us do that. So the setup, and here's what the search looks like. Okay, it requires either your real-time subscription or the Pro Trader Premium add-on, and what the course will come with is the Pro Trader Premium add-on, because Pro Trader is a technical analysis scanning tool um, that allows you to search for technical indicators, MACD, support and resistance, stochastics, and moving averages. Okay, so just simple 5, 8, 13, 50. You look for the 5 if crossed above the 8 within the past 5 days. You want both moving averages up. The 8 to have crossed above the 13 in the past 5 days, both moving averages up. The relative timing 3 days ago, the stock RT, relative timing greater than it was 3 days ago. Just simple price and volume parameters. You can change this. This is just looking at price greater than $1, average volume greater than 50,000 shares. You can bump those up if you'd want. And then again, price, which is the moving average 1, to currently be above the 50-day moving average and has been for the past 1 day. Okay, so just some key concepts to review. Let's use history to give you some confidence. Using graphs, you can visually see the best setups for entering a trade and when you need to prepare to exit. Okay, and that's for both the Canadian and the US markets. Buy rules are, we want to make sure the DEW is up. Price above the 50-day moving average doesn't necessarily have to just cross above the 50. It can just reside above the 50. The 5-day EMA to be greater than the 8-day EMA. The 8-day EMA to be greater than the 13-day EMA. Okay. We also want the RT to be trending higher as well. Sell rules for the more prudent investor that will require a change in trend. We're looking for the 5-day to close both below the 8 and the 13. Okay, just some key concepts that we'll review. 5 key ways to use moving averages, and the EMA squeeze swing trading system, which is a complete system. You know, a lot of times swing traders, and I know this because I do a lot of webinars where I ask questions, right? And one of the questions that I ask is, what's the hardest part about swing trading? And the answers I get are when to buy and when to sell. Those are the 2 most common answers that I get when I ask the question, what's the hardest part about swing trading? You know, also finding stocks to trade as well. This is a complete system. This system answers both of those, kind of covers those answers, right? You know exactly when you're going to be buying and you know exactly when you're going to be selling. There's no gray area with this system. All right. So let's talk about the course, guys. Let's talk about the course. It says new course, but this will be the second time that Stan and I deliver this course. You get full access to all the trading modules. I think that there are about 10 or 11 of them, 10 or 11 different lessons, and you get those modules, access to those modules at the time of purchase. Here is what's taught. The VectorVest system, just some basic principles, the tools that we'll use, and the market timing signals that we'll use, understanding moving averages, the different types of moving averages. We're going to teach you about trading just with a single moving average. What I taught you here, I wouldn't call it more complex, but it uses multiple moving averages. Okay. Golden crosses, trading crossovers. Shorter term moving average crossing above a longer term moving average is a buy signal. Shorter term moving average crossing below a longer term moving average, that's a sell signal. We'll talk more about moving averages as support and resistance. More on this complete EMA squeeze swing trading strategy. More multiple moving average trading systems other than the EMA squeeze. Dr. Barbara Starr, she put this system together. It's called Surfing the Reversal Waves. Helping us identify reversals using moving averages. The Midas Touch system, this is for both swing and long-term swing traders and longer-term investors. Our Midas Touch system uses moving averages. It applies moving averages to our stop price and on the relative timing indicator as well. And then we're going to give you guys a bonus trading system called Trading High-Low Moving Average Bands. Okay, and the best part is we're going to provide you guys with 6 live mastery support sessions. Okay, they will begin on April 21st. I'm going to have Stan actually type in the address that you see at the bottom there. Oh, I got to do something here quick. I'm sorry, guys. Give me one moment. Give me one moment. Give me one moment. Stan, if you want to jump in here real quick and just kind of wrap up, I'm going to just talk about some of the bonuses. I'm going to do something real quick. I know Stan is in the background. Give me 1 second, guys. So again, here are the bonus offers, guys. The 6 live mastery support sessions, they will begin on, fantastic. They will begin on April 21st, okay? And we're gonna hold those once a week, okay? Once a week, beginning on April 21st. Okay. Current subscribers will have access for 60 days to the US Premium Real Time beginning on April 3rd if you don't already have it. All right. Non-subscribers will get 60 days access to the software as well, beginning on April 3rd, and that access includes ProTrader and the Auto Timer, which is a genius tool and a backtesting tool for portfolio management. Okay. ProTrader is a technical analysis searching tool. You'll get access, fully access to those for those 60 days beginning on April 3rd, along with the moving average crossovers and the moving average scans. It also includes MACD, Bollinger Band, stochastic support and resistance, channels, RSI, envelopes, things like that. And that auto timer adds market timing to fully automate either a backtest or a portfolio. Okay, so I'm going to have Stan, I'm not sure if he did this, type in the address that you guys see at the bottom there. It's www.vectorvest.com/MA. Okay, once you go there, you will see the $295 rate. Now the regular price is $595. All right, there is an early bird rate of $395, but for you folks here today that are joining us, and I want to thank you guys for being here. We're going to knock some more money off, and if you order before the end of today's webinar, and I'm going to keep this price open for a little bit longer, but it's $295. Here's what you're going to get: 10 full lessons. I said there were about 10 or 11, so 10 full lessons. The VectorVest system, understanding moving averages, trading with a single moving average, and so on. Okay, you're also going to get case studies and homework assignments included with every lesson. And that's what those mastery sessions are going to be really for. They're going to be to help us review the contents of each lesson. By the way, you'll notice, okay, so we have 6 live mastery support sessions, but there are 10 lessons. We bunch lessons together, and I can't off the top of my head remember exactly which lessons are bunched together, but we'll bunch a few different lessons together and then cover the contents of those lessons in each mastery support session. Okay, case studies and homework assignments will be given, and we'll go over those in each mastery support session. Okay, here are the dates. They begin on April 21st, and we'll start at 2 p.m. Eastern Time. 21st, 28th, May 5th, and so on. And that bonus module, we'll have a bonus module on June 2nd. Okay. You're also going to be given scans. Okay. You're probably wondering, all right, they're going to teach us all of these techniques, the EMA squeeze and golden crossovers and all of these different types of trading system using moving averages. Well, we're going to give you guys scans as well. Stan, I believe, is in the process of recording videos on how to create the scans. Okay. And the search parameters, the scan parameters, will be uploaded into the university as well. You have to create them yourselves. They're not going to be inserted into your programs, but Stan and I both agree that this exercise here of creating scans, we're going to give you the parameters. You have to go in and create the scans, but it's a really nice exercise in you learning how to create scans, no matter the ones that we're using here or just moving forward. You will know how to create scans after this course, because you're going to create a few of them, but that's going to help you moving forward. Okay. Brian says, since the DEW is in a downtrend right now, will that affect the class? No, it won't affect the class, not at all. Anthony's asking, what is a scan? A scan is a list of parameters that find stocks that meet those parameters. It's a search. It scans the database for you to find stocks that meet all the parameters that you have listed there. Okay. So here's Rob. Rob sent an email to Stan, said, thank you once again for a great presentation on the multiple moving averages. Your Mastering Moving Average course, as always, is well documented and has a wealth of information. I really like the 20-day moving average channel search. That's another search that you're going to get. I think the MMA course should be a fundamental course for new and experienced VectorVest users. It has been very educational, and I look forward to using the setup/searches of the program to advance my investing success. Thanks again. Great job. Another email by Warren. After taking the MMA course, I am now able to better determine entry and exit points. If you guys are struggling with entry and exit points, this is a fantastic course. My win-loss ratio following my old plan resulted in 51% wins with very little monetary gains. If I would have followed the 20-day moving average strategy, I would have 75% winners and produced my largest portfolio gain. Using the EMA squeeze, which personally, guys, that's my favorite technique, I would have netted me 84% winners with the second largest portfolio gain. The golden crossovers would have resulted in 64% winning trades with the smallest of the 3 portfolio gains. I would have gladly taken half of the portfolio gains in any of those 3 strategies. So go to vectorvest.com/MA. I know Stan did type that in the chat box, www.vectorvest.com/MA. This $295 rate, it's a very, very low price. It's a very good rate for this course. You get all 10 lessons, you get 6 mastery support sessions, you get access to the VectorVest software, you get the Pro Trader scans, you also, the Pro Trader scans, which are again, those technical analysis searches, and you're gonna be given searches as well to make finding the trades really, really easy, as opposed to, all right, they're gonna teach us the EMA squeeze. Do I have to go through chart after chart after chart to find candidates? You don't. The scans will help you get there. Okay, just a couple questions I do want to answer before we wrap things up. Hughes says, is this for traders or investors? This is for both, Hughes. This is for both. Okay, we're going to give you swing trading systems. We're going to provide you with longer term position approaches as well. Hiran says, URS member will get benefit from this? Absolutely. So who's gonna benefit from this? Anybody who is a swing trader or a position trader and wants to learn more about techniques using moving averages. If that's you, then you will get something and learn from this course. Okay, the course starts, well, the modules, Dimitri, are accessible immediately after you register. Dom says just purchased, see you there. So Dom will get an email soon with directions on how to access all of the modules. By the way, when you log into the university and you see the outline with all the modules, the old mastery sessions that Stan and I did back in November, they're in there as well. They will be replaced with the ones that we do with you guys, and that's how the content is always updated. By the way, you also get this for an entire year. You get the course for an entire year. All right. So Martin, I think I just answered that. How long will we have access to these lessons? For an entire year. Okay. Edward says, I'm in. Welcome, Edward. We look forward to working with you. Let's see. I answered those questions. So we get real time for 6 weeks, Raquel said. You get real time, yes, for the duration of the course. 60 days. 60 days access. Okay. Raquel says, I'm in. Welcome aboard, Raquel. My email address is there as well as Stan's. If you have any questions, guys, about anything that I covered today, if you have any questions about the course itself, email Stan or I. But the $295 rate will only be available for a short period of time. You know, you have the ability to register for $395. That's the early bird rate. That'll go for a little while, but save yourself $100. What's that? 25% off the $395 rate, right? David says, does real time include Canada real time? It includes whichever real time you want, I believe. Is that true, Stan? I believe it's whatever real time program you want. It doesn't include both real times. Yes. Fantastic. All right. All right. Brian says you are offering Pro Trader Premium with this class. So the Pro Trader tool is given to you with this course. Yes. It's part of the course. The Pro Trader tool again is the technical analysis scans that really help identify these setups. All right. Oh yeah. So elite members, good question, John. The elite rate is half off the regular rate. So half off 595 is actually 297.50. So no matter when you register, if you're an elite member, you will pay 297.50 unless you register now. You'll save $2.50 and get the course for 295. But the elite rate is 297.50 unless you register now for the 295 rate. Anthony says, do you need real-time data for these strategies to work? No, you don't need real-time data. You actually don't need anything other than the base package, the VectorVest end of day. But honestly, you know, because we're going to teach you techniques that you can apply no matter the data feed that you have. But the Pro Trader tool is really important because it helps you scan for the setups as opposed to looking at all the charts, you know, chart after chart all the time. Yes, this webinar is being recorded. You'll get the recording sometime today. All right, so we're gonna send out this recording. I believe, Stan, they're also gonna get the slides as well. We'll send those out later as well. Mm-hmm. There you go. Okay. That's right. So just send an email to stan.heller@vectorvest.ca and we'll send you those slides. All right, Glenn, you're welcome. Okay. Don't request the slides, guys, in the chat. Send Stan an email. That's the best way to do it. All right. Yes. That is correct. That is correct. Mm-hmm. Yep. Pro Trader it can be, or it is an end of day module. You know, you don't need real time data to have Pro Trader. It comes included with the real time program for either the U.S. or the Canadian markets. But we don't have real time data for the U.K. market, but you can use Pro Trader. Okay, so register www.vectorvest.com/MA. You see that website on the screen. Stan also typed it in the chat box, www.vectorvest.com/MA. If you have any questions, you can call the 888 number, but if you want to register for the 295 rate, you got to go to vectorvest.com/MA. John says, how are the live trading sessions conducted? As a group or one-on-one? It's a group sessions. Okay, the searches, John, that you will get are not in the Pro Trader tool right now. They're special searches for this course. And Stan is recording some videos on how to create the searches, and the parameters are located in the VectorVest University once you sign in there. Okay, so they're not in the program now. No, not everybody gets these scans, only the ones that do register for this course. Karen says, I am in. Awesome, Karen. Welcome aboard. Look forward to working with you. All right. Yeah, so Daniel, I hope I answered that. www.vectorvest.com/MA to register. All right, guys. Well, on behalf of Stan, I'm looking forward to this course. You know, I love moving averages. I love swing trading, just anything, you know, in terms of trading in and of itself. I really enjoy teaching this stuff. So I look forward to working with you. Email either Stan or myself. Stan's email is there, stan.heller@vectorvest.ca, or me at jerryd@vectorvest.com if you have any questions at all. Stan, did you want to close with anything? Anything else you want to add? Thank you. Yes. Ah, yes, yes. If you're already logged into the VectorVest University, right. Yep. Right. Yes. Thank you, Stan. Look forward to working with you folks. Again, if you have any questions, either give our support department a call or shoot either one of us an email. Have a great day, everybody. We'll talk to everybody soon.